Hello class, welcome today. I'm excited to have you here. Just a few announcements I have, all right, is for my middle school students. I will be visiting you this week. We're going to be talking about foundation again and money principles, what is money and how money works, okay? And I have a special message that I want to give to my younger middle school students, okay? Listen to this. Let no man despise thy youth, but be thou an example of the believers in word, in conversation, in charity, in spirit, in faith, in purity. Okay, and what basically that's saying is don't let anyone look down on you because you are young. Okay? Don't let anyone look down on you. You have a lot to offer to this world. Okay? You have knowledge that's untapped, undiscovered, and it's your job to figure out those talents that you possess so that you can give to the world, make it a better place, help people, serve people in conversation, in charity, in spirit, in faith, and in purity. Okay? With that being said, let's direct our attention over to the board now. We have an example where we're going to show how to pay off our mortgage in 5 years or less for this particular example. All right? So I need you to write some numbers down because I didn't write it on the board. I didn't have enough space. Bear with me. I will be purchasing more things in the future. Okay, give me a thumbs up or a thumbs down on my audio because I did improve it. I got something new. All right, so let me know how that works. All right, and in the future I'll be buying a nice size board. I'm gonna put it against the wall, and we're just gonna up our game even further. Okay, so I need you to write these down in your notes. These numbers: income, 45, 22, 56. Okay, so $4,522.56. Our expenses are $3,364.69. Our total debt is over $150,000. Okay. Our cash flow is $1,800 being the highest, $1,000 being the lowest. So between $1,000 and $1,800. Right. Lock those numbers in. Okay, on the top of the page. All right. This scenario, I also want you to write male, 46 years old. Okay. That's who we're dealing with right now. And we're going to get him debt free by age 51. How awesome is that? All right. So let's break it down. We have our debt weapon. Okay. This person managed to acquire a debt weapon from TD Bank. Okay. Unsecured line of credit for $20,000 at 9.75% interest. Okay. To calculate the cost, right, we have to determine what our chunk amount is going to be. Okay, so for the first chunk that we make in this scenario is going to be $12,000. I'm going to be using the $1,000 cash flow, right? You know how most of my examples I like to go low. Okay, so we're going to use the 1,000 of cash flow times that by 12. That's 12,000. All right, and what's also a good rule of thumb to have when we're doing velocity banking is you don't want to use all of the line of credit, especially if we have a very large line of credit like 20,000, 30 and above. Okay, if I'm working with you and you have a line of credit that's like $5 grand, $3 grand, $2 grand, no big deal. We can use the whole amount because your income is just going to zero it right back out in a month or two. So there's really no issue there. It's when we start getting in the higher bracket, you know, we want to avoid banks from freezing our HELOCs or anything like that. So the chunk is 12,000. The first thing we're going to pay off, okay, obviously we have a mortgage that we're dealing with. but he also has a credit card for about $6,000 or so. So of the $12,000 chunk, we're going to take about $6,000 or so and pay off the credit card and immediately increase our cash flow by $61. Okay, times that number by 12, that gives us a new total cash flow, $732. Right, 61 times 12, that's $732. Add that to the 12,000. What do you get? $12,732 is our new cash flow. Okay, so of that first chunk of 12, we took 6, paid off the credit card, and in that same month, okay, October 2018, we're going to pay our mortgage payment, which is $1,462.61, and then the remainder balance, which is about $3,000 or so of that 12 initial, is going to be an extra principal payment towards the mortgage. It's going to give us a bit of a head start. Okay. Now, it's going to take about, I want to say 6 to 7, 8 months to zero out the $12,000 line of credit, simply because, remember, our cash flow went up $12,732, okay? And what also happened in that same month, since he satisfied the month's mortgage payment of $1,462.61, guess what? That's cash flow when he gets his income for the month. That's going to give him a bit of a boost, okay? Because he's not going to have to pay that from his cash for the month that he's making. So where is that cash going to go? It's going to go back into the line of credit, okay? And it's going to drastically zero out that much faster, okay? So working on the timeline, let's say, we're in 2019 now, like around March-ish, probably even sooner than that. And now we have to determine our new chunk amount towards the mortgage, okay? So you take that $12,732, and I want you to add it to the $1,462.61, okay? Our new chunk amount is $14,194.61. Denzel, why did you do that if our cash flow for our number that we're using is only $12,732? Wouldn't it take me longer to zero out the line of credit than 12 months? No, right? Because remember, when I take out $14,194.61, okay, of that chunk, $1,400 is going to satisfy that month's mortgage. So when I get paid, right, throughout that month, I don't have that bill, right? So that's an extra $1,462.61 on top of the $1,061 cash flow. So that'll boost up the debt payoff time for the line of credit. So we'll have that thing shrunk into about 8 to 11 months. All right, so let's calculate the math on how long it would take to zero out the mortgage itself if we're making $14,000 chunks, right? So we've got that chunk amount, but then I also want you to take the $1,462.61 times that by 11 months, because you still have to make the mortgage payment every single month. How do you do that? From the line of credit, right? We're dumping our income, taking it back out to pay expenses. Dumping our income, taking it back out to pay our expenses. Doing that for the next 8 to 11 months, right? Until you bring the line of credit back up to zero. Make sense? Cool. So you add the two numbers up, got your 14, okay? 1,400 times that by 11 months, boom, $16,088.71. That's a total of $30,283.32. You divide that by the total mortgage, $147,000, and you get 4.87 years. So we paid it off sooner than 5 years. So he'll probably be 50, turning 51, completely debt-free. Okay? Which would you rather do? Would you rather go this strategy or do nothing and pay your mortgage for the next 21 years? Okay, if you do this, let's break down the math. 21 years, right? Times that by 12 months, that's 264 payments of $1,462.61. Okay? And what do you get? $386,129.04. My friend, that is 2.5 times the mortgage price itself. Does that make sense? No, we don't want to do that, right? We don't want to do that, okay? So let's be open-minded. Let's learn. Let's conquer this strategy together. Let's work together. Let's kill this debt, all right? Now, 5 years from now, mortgage is done, all right? He's going to have an increased cash flow of $1,462.61, is he not? Of course he is. All right? Now, the question is, what do we do in the process of paying off debt and after we become debt-free? What are some things that we can do to secure ourselves, all right, financially? So here's what I would do if I was 46 years old, all right, and I got presented with this strategy with the information that I know now, all right, is this. If my cash flow is $1,800, right? Remember how I said on the high end, 1,800, on the low end, 1,061, okay? Now, me personally, I'm going to do everything I need to do to make sure that I cash flow $1,800 every single month, right? Because here's what I'm going to do. Remember how I said I took 1,000 of cash flow to velocitize, okay? I got 800 left over each and every month for the next 4.87 years. So I'm going to take 500 of those dollars, okay? And I'm going to get my savings asset in line. I'm going to get my insurance policy rocking and rolling, right? 500 times 12, that's $6,000 a year, okay? Times that by 5 years, by the time the mortgage is paid off, I'll have about $30,000 in cash value, along with a high death benefit, which is securing myself in the event something happens to me, okay? My daughter will be all right, okay? Because in this example, he has a daughter, okay? So that's part of his family, right? He probably has other family as well, but that's the whole idea. Securing wealth, we got a legacy built day one, right? Getting that in place. Then the other $300, okay, right? 800 minus 5, got 300 left over. That 300, I'm gonna create my reserves, okay? And this is money that can sit in cash, can sit in your savings account, can just sit in your checking account, okay? It's your Dave Ramsey emergency fund, okay? That's your last resort money, okay? 300 times 12, $3,600. Times that by 5 years, you get 18,000. So by the time he's debt free, the mortgage is paid off, he has well over 150,000 in equity in his home that he can velocitize some more, maybe acquire another investment property, a rental, right? Okay. He's got 18,000 in reserves, right? He's got at least 30,000 in cash value, tax-free money growing at a guaranteed interest rate, okay? And by the end of that 5-year period, he'll be cash flowing about $30,000 a year, right? To be exact, he'll be cash flowing $30,283.32, right? We got the 1061 times 12. That's my $12,732 plus the $1,462.61 times that by 12. Okay? And you'll get a higher number than the 16. It'll be about 17. So you add the two numbers, you're going to get the same number, $30,283.32. What would I do at 51 years old with 30 grand of cash flow each and every year? And by the way, my expenses are still getting paid, right? I'm still living. I'm still doing my thing, all right? Here's what I would do. For this gentleman, he's got a YouTube channel as well. I'll have a link. I'll have a card. I'll have his link in the description. You guys can check him out as well, okay? And he's into personal development and health, all right? So if he wants to, dive deeper into that realm, right? Become a master, a practitioner in that, right? He can take 50% of the 30 grand and just invest in himself, invest in his business, right? This is what I would do. I would take 50%, stuff it in my business, and just build me for the next 9.5 years, right? Till I'm 59, just building me, right? I'm buying books, I'm going to like workshop seminars, big conferences, maybe like a Tony Robbins, John Maxwell, like really powerful people to be around, okay? And then the other 15,000, okay, I'm gonna store some in reserves, okay? And I'm also gonna store even more in my tax-free bank over here. And that's gonna continue to grow. And then maybe what's left over, I can treat myself. Let's call it guilt-free spending, okay? I'm gonna treat myself. I rewarded myself, right? I paid off my mortgage in 5 years, man. How many people do you know accomplish that, right? Small, very little, very few people will accomplish that. On this channel, though, everyone is going to accomplish paying off debt, okay? That is my commitment to you. Got it? All right? And by the way, I reached my goal, 104 forms submitted, all right? I'll be reaching out to every single person that filled out a form, and we're gonna tackle this debt. We're gonna increase cash flow, raise our credit, all using our own income to secure wealth and leave a legacy behind for our family. So I hope you enjoyed this scenario here, how we paid off a mortgage in 5 years, and also how we, created wealth for ourselves, all right? Secured a legacy for the family. My name is Denzel. Hope you enjoyed today's class. Stay tuned. Got content coming every single day, all right? Thank you so much.